All right, let's go ahead and do a recap here for Monday and take a look at kind of price action. We'd already talked about some of the key levels and stuff that we're looking at for the week through the weekend recap. This is the key levels of support that we have here on the daily for today. As of right now, you kind of see that we were starting down here at the bottom and started to break up through these key levels of support, and they started to hold. And we saw it break on up, and now we hit the last week's high liquidity hunt zone. Makes sense that it came up and hit this area. Now we kind of watch to see how we're going to structure. There is areas to be concerned here because you do have a higher high and a lower high, and then you have higher high here and then a higher high. So you have a lower high to a higher high. That's the bearish divergence. It's on the 4 hour. We can look at the longer time frames. You can see that right here. The same thing, higher high, lower high, a lower high and a higher high. And we did just do a liquidity pull, which basically means it came up and wicked above and then dropped right back down. This is the 22 hours, so to kind of see how things play out here. And still looking at the daily, just kind of topping out. It could just flag out through here and build support, or it could start to break down and we start looking for some key levels down in here, these lower areas. One thing that we are watching, or I'm watching right now, is this is kind of see how we play out here over the next 2 days or so. See how we are for support. I do have the charts that I marked up for other things. That's why there's kind of these different arrows and lines and stuff on them. But the key thing for today, though, if we actually break out the price action, here was the change in the market. You had the 30-minute candle set up right here. So here was your high, here's your low. We broke out in the morning with volume, and we continue to run. One thing that you can look for, which I talked about before, is you had this run down after the week closed, Sunday night into Monday morning, early morning. You can see this run down about 2 o'clock. It came down here, and we had the bodies of the candles close right around here, about 102,000, 160 range. Then we traded back up and grabbed the 21, and then we started to come back down. And you can see that it could be a double bottom, if you will, that also is a little higher. So it's about 102, 280 or so that these wicks closed. So this is a good sign of a flip. You can see it right here too, the low and then the high, and then we snapped up. Here we are again, the low and then the higher low, and then we ran up. At that time, RSI and everything was at the bottom here. We're coming out of the bottom, which showed strength for an up run. Same with this here. So typically too, when you get a close and you get a run up and then you get a hard run down, a lot of times you just get a recovery. And that's kind of what you saw in the last 24 hours. It just kind of flushed itself out. So that's what you're kind of looking at here for Monday. Just a quick going through price action, kind of showing you some stuff that's going on. So right here is where it triggered, hey, let's get in. What we need to do is break this neckline right through here. And that's right around the 103,200 level. Well, the biggest support, if you go back and look, it's sitting right here. And it's 103,300. Right as it's coming up, you can see that it's coming up with high volume. See this high strong candle starting to increase. They're coming out of this support area that we're just talking about. So when it broke this level right here, that's when you want to look at taking the trade. You can see I do have that marked out, and then you just let it run to 3-to-1 or look for targets. Strong target zone would have been this high up here around the 105.8 level. You could have also said, I want to take this area down here, which is the 1.5. Typically, that's what I like to trade is the 1.5. If I was going to try to push this up, I would have taken the 1.3, but taken some off at these key levels that we already have marked, taking some percentage off. Now you could go down into the 5-minute with this and use the 21 as the rule. So right here, when you lost the 21, this is when you would have looked at getting out as it's breaking down right through here. So this basically would have fallen back into your 1.5 range that we can get out. You can see that I basically was looking for the bull flag here throughout the day. That's why I left this on here so you can see it. And this is where I projected the price action to go off of the breakout, which took you right up to the 106,480 range. And as the market came to the 12-hour mark, we were down. We just within about 15 minutes, we had spiked up out of this, already pushing out of range, and we ran on up. So now this is the evening. You can see that it came and grabbed liquidity right here. This is the classic strategy right here for what we're looking for a reversal. And I say that we're on the 5-minute, so it's a low time frame, but you do have a higher high, lower high, a lower high, higher high. So that's bearish divergence right here in the 5-minute. And we are breaking back down. Is the 15-minute going to follow in the higher time frames and start to show reversal and have us come back down into these levels and slowly start to break down because we pulled the liquidity from the top? That's a good question. That's what I'm looking for to have this set up. So on the 15-minute, you do have a higher high here and a lower high here, and a lower high and higher high. So there is bearish divergence coming up through here. You saw it run up really hard, and then it fought right here in this level and then snapped down, took a lot of liquidity out. You can see that it did run hard through this time frame. The 1 hour is showing you that too. Here's your two extended wicks up here and double tops right here. This is a very strong closure. The other thing is you can call it the 3 candles up here. And what it is you have the lower high right here on this candle. This candle is a higher high, and now this candle is a lower high. So those are your 3 candles to show reversal. Right now you're extended through this area. This also hasn't called bearish yet. It's still bullish, but it is showing softening and consolidation and rollover. So that could still be in play. The moving averages right now are not too far from each other. You can see that they've been fighting through this area through Friday, Saturday, Sunday. The price action has moved a lot, but the moving averages haven't. So we could watch for these to come back down and fight these major areas that are marked on my chart. You can see them. So this area right here is about 104,800, which is a key level. The 104,200 range is the key level, and the 103,300 range. These are all major support right now for us to break back through. So it could bounce, go up, that idea. We'll have to see how things start to play out, like I said. So that's just forward thinking and giving you kind of key levels to watch. Or we consolidate and we rebuild a pattern for us to move higher and take out a higher high. So we'll just kind of have to watch how price action plays out. That was the trade. Like I said, there was a consolidation trade after the run up. The 5 minute had said to get out. You could have waited for a possible get in. You can see that I did drew the bull flag on here for continued price action to push up. The reason why these trades I don't like to talk about a whole lot, because you can see that it's not giving you a strong indication. We're on the 15 minute. Right here, you had the bearish cross on the MACD, and it wanted to trade down. And it fought all afternoon to get this run up. This is a hard way to trade. It's a lot easier to take this run right here, make the money, get out, and then get away from the market, wait for a recess and get back in and take the opportunities again. And but not that there's not trade opportunity in any of this. You could have made money. So you could have taken this position here, anywhere in this area up here. Support would have been down through here using these levels. So you could have been, that would have been your support, and use these as your exit zones, if you will. So anywhere in here inside your flag would have been a potential trade. But your conditions and what you're saying is this is going to be the flag and we're going to continuation out is what you're calling. So obviously you could run a tighter stop through here as well and take advantage of the opportunity here. Also use this as your original support and have this breakout as well. So just pointing that out, there is always opportunity in the market. You just got to find it and read price action. And this is why I'm showing you these levels, is because these are your support and resistance levels. We can turn on the weekly right now. It's the Sunday through Sunday. That you can see as I turn this on, how it overlays a lot of these key major support levels right through here. In the one, that's why I was pointing out the 103, 103,300, the 400, the 104,800, and then you have these key levels right up here from the week. So that 105, basically 106,000, and then right up here to 106.6 is where we topped out. So those are all key levels of major support, even on the weekly, that we are going to be watching. Once I see it break the 103,000, if we go out to that hour, you can see that's also basically where your 200 is. This is a good reversal. A lot of times when you lose the 200, you can see that we've been fighting in this zone quite a bit, and it's been barely carrying us out of here. So we'll have to watch this now that we're sitting in the key zone right through here. So that is about it for the Monday recap, giving you quite a bit of information for you to use and trade and take advantage of the opportunity that's in front of you. Again, watch our X account. Look up Kubota. We do put these key levels on there. We talk about this every day in the morning and give you areas to look for in the market and a bias of the market as well. If you want, I could pull that up, but for sake of time here, it did show that early report did call for this bullish settlement bias on the market and showed aggressiveness and key levels that would have been taken out for the run up. So this area was all basically called on our X feed. So that's about it. We'll see you guys in the next recap tomorrow. Talk to you soon. Thanks, guys.